And we've got two experts joining in on the show right now. Karan Taurani from Elara Securities. And we've also got Anant Iyer, Director General at CIABC, joining in on the show to talk about exactly that. Gentlemen, both of you, thank you so much for your time. Anant, if I could start the discussion for you, help us understand what exactly does this FTA really mean for the Alcobev industry, because many say that this is a move which is going to narrow down the price gap between both domestic as well as duty-free Scotch whisky to begin with. Anant, can you hear me? Okay, Karan, help us, analyze and break it down for us as to what does this news particularly mean for both the Indian as well as the, UK Alcobev industry.
Hi, Aisha. Good morning. I think what this does is there will be a fall in terms of the Scotch prices. If we look at the Scotch price right now, let's take the example of a red label, which is an entry-level Scotch in India. The price between duty paid and duty free today is around 30% on a same volume basis. Now, the duty cut has come on the import price, which is the CIF price. It's going to come down from 150% to 75%, which means that the duty component, this component is going to come on CIF price. So the impact is not actually very large. It looks like the duties come down by half, which means that the price will see a big fall in terms of the overall MRP. But the actual price fall is not more than 10 to 12%. And let's say even if this duty goes down to 40% in a phased manner, is what they've been indicated, even then the price fall will not be more than 15%. So definitely MRP will see a cut as far as duty paid Scotch in India is concerned. But the fall is not more than 10 to 15% in our assessment as of now. Now, what this does is that this will obviously give a lot of fillip to Scotch volume growth. It kind of get the prices of upper prestige and the entry level luxury segment closer, in terms of gap. So United Spirits will be the big beneficiary out of it as far as volume offtake is concerned. But I think if you look at their business model, the bottle in origin, the bottles which are there, which in terms of the parent arrangement with Diageo, the profitability and the EBITDA margins are capped there. So this will give fillip to growth, but as far as profitability is concerned, is going to have a negative impact in terms of EBITDA margin, which means that effectively the net positive impact will be very small for United Spirits. Second, in terms of the Indian whiskies going global, we already have seen, Indian single malt traveling to UK and other countries in a very big manner. So they have seen acceptance. So this will kind of, boost that movement as well. But I think if you look at the single malt volume in terms of cases, in terms of scale, that's relatively extremely small. So companies like Radico might see a small benefit because they do make a lot of different kind of single malts and they do export to countries like UK, but not in a very big manner. So the bigger growth driver here is the Scotch segment in India, whose MRP is coming down by 15-20%.
Right, I think Anant is also back with us. Anant, if you can hear me, hi, morning. Just wanted to understand what are your calculations anticipating as to how much the domestic prices are likely to fall by?
Hi, good morning, and thank you for having me on the show. The UK-India FTA is a mixed bag for our industry. We had definitely recommended that, there could be a drop because, we have been in negotiations and the government has, reached out to us. The 75% reduction will be obviously helpful to all the importers of bulk Scotch because, yes, a lot of Indian blended whiskies do put in bulk Scotch. So all the manufacturers and marketeers of IMFL will have a benefit in terms of the bulk Scotch. However, the bottled in origin drop without a concomitant minimum import price kind of a cap may and could lead to a surge of cheaper Scotch whiskey, flooding our country. And if the same template is followed for other, countries, especially in the EU as well as the US or Australia or New Zealand, where wines are a very predominant category, then the Indian wine industry could get adversely impacted because no one gets bulk wines per se, but they will definitely get bottle in origin, and that could create issues. So it's as I said, a mixed bag, and we are also looking at the finer details which would be released by the government in terms of the FTA agreement, in terms of market access. We only hope that the recommendations or suggestions given by us that we get market access to the Western countries, which is currently not available for whiskey from India, and we were very prepared to call it Indian whiskey. Same goes for Indian rum too. If that is allowed, then that would be helpful for us to gain an export leverage out of India, because there is a very attractive $1 billion target set by the government till 2030 for our sector. And for us to reach that market access across international markets, all markets, especially the Western markets, which are good developed markets, would really help us. So as I said, yes, the 75% will help lower the price of bulk imports, but the bottle in origin products, whether it's wines or spirits, that could pose an issue.
All right, so it's been a mix back for the industry as well as the wine sector could also get a hit. But Karan, just wanted to have an understanding on United Spirits' margin trajectory, because the point that you were highlighting that despite the fact that the volumes could get a push, because of the cap in the margins, there could be some impact eventually. What sort of an adjustments are you penciling in with respect to margins specifically?
So in terms of the EBITDA margins, you could see a negative impact here. I think if you look at the overall EBITDA absolute upgrade or downgrade for United Spirits because of UK FTA, you may see a 2 to 3% kind of an absolute EBITDA upgrade. But on a percentage terms, EBITDA margins could see a negative impact, and even in the range of 70 to 80 bips, because growth will kind of amplify, for the segment which is low margin in nature. So that is the broad impact. And also, if you look at the other players, so because of bulk scotch prices coming down, companies like Radico, ABD, which import a lot of bulk scotch, for their products in terms of blended, whatever they make in India, you will see a positive impact in terms of their profitability. As per our assessment, close to 3 to 5% COGS for the other Alcobev companies is the scotch cost. And if that comes off of half, you probably will see an EBITDA earning upgrade of anywhere in the range of 5 to 7% for the other companies, depending on the quantum of scotch that they import.
Got it. Okay, let's see how these stocks actually react. I guess the most sensitive is going to be United Spirits. But Karan, Anant, both of you, thank you so much for your time today. Good speaking with both of you.
If you like this video, then like, share and subscribe to ET Now.